50-30-20 Rule for Personal Financial Management. The 50-30-20 Rule budget is a straightforward approach to budgeting that avoids specific budgeting categories. Instead, you devote 50% of your after-tax income to necessities, 30% to wants, and 20% to savings or debt repayment. The first step is to figure out how much money you have to allocate to your needs, wants, savings, and debt. For example, your monthly after-tax income is $5,000 per month. You'd have $2,500 for necessities, $1,500 for wants, and $1,000 for savings and debt in this scenario. Now that you know how much you may spend in each area using the 50-30-20 rule budget, the next step is to figure out which expenses belong in each one. You'll have to use some judgment in deciding what belongs in each area, but here are some rules to follow. 50% to needs. Needs are things that you can't live without, or at least can't live without very easily. They include items such as rent, mortgages, food, utilities such as electricity, water, car loan repayments. If your required expenses account for more than half of your income, you may need to reduce your spending or put into your wants fund. 30% to wants. Wants are things you want but don't require to live. They could include the following: dining out, alcohol, cable TV, internet, shopping trips, vacations, memberships, subscriptions, presents, entertainment, and other indulgences. This category might also contain luxury upgrades. For example, if you buy a fancier car instead than a cheaper one, that falls under your wants category. 20% to financial objectives. This category is divided into two sections. All savings and also include unit trust, share investments, payments on debts. Experts also recommend setting aside enough money in your emergency fund to cover 3 to 6 months worth of living expenses. There are also recommendations putting money aside for an emergency fund first, then focusing on long-term investing. You'll need to set aside part of your wants money for extra savings if you want to save money more quickly. 50-30-20 Rule budget good for you? There is no one-size-fits-all strategy to money management, but if you're new to budgeting and unsure how to divide your income, the 50-30-20 plan can be a good rule to follow with. Keeping track of only 3 categories may allow you to concentrate on fine-tuning your finances rather than becoming bogged down in the process of categorizing each individual expense. There are some people may find it more difficult to identify strategies to improve their spending habits due to a lack of organization. You can also decide if a less complex or more detailed budgeting strategy is ideal for you. Thanks for watching. If you are interested to learn more about personal finance management, don't forget to like our video and subscribe to our channel.